This is one of the most important inflation reports for the US dollar because the Federal Reserve pays very close attention to it. That the US government will take a 9.9% stake in the company as potential downside targets for the S&P 500. Hello and welcome back to the Xchief channel. I'm your host, Isa Martinez, trader and analyst, and today we are diving deep into a market that just erased its biggest gains in a single day. From a major tech stock on the rise to a surprising pullback in crypto, we'll uncover the key drivers behind this week's volatility and what they mean for your trades. Stay with me to find out if the rally is really over. We will start as always with the economic calendar, and don't forget the hours you are going to see are based on New York time. On Thursday at 8:30 a.m. we have two major US dollar reports. First is the preliminary GDP report. GDP stands for Gross Domestic Product, and this report is like a report card for the entire US economy, showing its overall health and growth. A strong number here can signal a healthy economy and usually supports the dollar. Also, at 8:30 a.m. we have the unemployment claims. This number tells us how many people file for unemployment benefits for the first time in the previous week. It's a quick and simple way to gauge the health of the job market. When this number is low, it suggests a strong job market. On Friday, also at 8:30 a.m., we have the core PCE price index report. This is one of the most important inflation reports for the US dollar because the Federal Reserve pays very close attention to it. It measures the changes in the prices of goods and services purchased by consumers, but it excludes volatile items like food and energy. Traders use this to predict what the Fed might do next with interest rates, as their main goal is to control inflation. Now let's start with the most important fundamentals of the week. And today, Monday, US stocks pulled back slightly after a major rally the previous week, reflecting a cautious mood among investors. The Dow Jones and the S&P 500 both dipped about 0.2%, while the Nasdaq was down 0.3%. This retreat comes after the market celebrated signals from Jerome Powell about potential rate cuts starting in September, which had pushed the Dow to its first record high of the year. Spotlight is now on this week's earnings report. The main event will be Nvidia reporting after the market closes on Wednesday. Analysts are optimistic, expecting high demand for AI hardware to translate into strong earnings. Nvidia stock has already had a stellar year, climbing more than 32% year to date. This week's report will be a key test not only for Nvidia, but for the entire tech sector. In other company news, Intel shares rose after it was announced that the US government will take a 9.9% stake in the company. President Trump's positive comments on the deal gave Intel's stock an extra boost. Finally, let's take a look at the crypto market, which has experienced some strong volatility. Bitcoin erased its recent gains, falling below $111,000 as traders took profits. This move occurred despite the dovish statements from Fed Chair Jerome Powell last week, which had initially boosted risk assets. While Bitcoin pulled back, Ether remained near its all-time highs, showing notable strength. This contrast highlights the importance of monitoring both overall market sentiment and the specific dynamics of each crypto asset. Now we will move into the technical analysis of the assets we track each week, starting with the strength of the US dollar. We saw that after the speech given by the chair of the Federal Reserve on Friday, there was a sharp downward move. This move manipulated the low located at 97.626. Following this, a recovery move is developing today, Monday, which will likely try to fill the entire imbalance left in the price action, as we can see here, also known as a fair value gap. This area serves as a primary target on the 4-hour chart. If the price remains bullish, the next liquidity point to watch is at 99.320. The subsequent target is 99.569, with a final objective in the 100.256 zone. However, even though I've laid out these upside targets, we must consider that if the current structure on the 4-hour chart holds, we could very likely continue to see significant corrections for the dollar. This would mean that other currencies paired against the dollar could continue to strengthen. As for downside targets for the dollar strength this week, we can establish a first zone located at the low of 97.556 and a final zone at 97.109. Next on the list, we have the S&P 500. We saw that after the liquidity void we discussed last week was filled, we had a very strong bullish impulse. It's likely that we could remain in this bullish momentum over the next few days. We should look for a move to surpass the target we set last week of 6,475 and potentially try to reach the 6,803 zone. As for a bearish objective that could be sought this week, we can set the low established at 6,343. We also have the liquidity voids located here at 6,261 and 6,212 as potential downside targets for the S&P 500 in case you are bearish on the asset. However, taking into consideration everything happening in the global context, the latest reports and all the fundamentals we have analyzed, it is very likely that the S&P 500 will maintain its upward trend. Let's move on to the euro, another asset we review every week. And as we can see, we have a very significant correction attempting to fill this entire fair value gap we have established the last Friday. This was closely related to the sharp fall of the dollar following Powell's speech. Currently, we should consider that this bearish move could continue. We would set the following downside targets for the euro: 1.15830 and 1.15276. The next zone we find is the fair value gap located here at 1.14870 with the final point at 1.13917. All these targets are set for the 4-hour chart, but they can also be considered daily chart objectives. For those who remain bullish despite seeing the manipulation that occurred here, you could consider the zones of 1.17889 and 1.18299. And keep in mind that by breaking this area, we would be surpassing heights not seen in the euro since 2021. Finally, let's wrap up with the Bitcoin chart, another asset we analyze and trade. It's important to understand that we have a significant bearish move. Although we saw an initial reaction to Jerome Powell's speech, here we can see this very significant reaction. A strong downward movement followed. Starting this past Saturday, we've experienced a major correction, reportedly due to heavy selling from old whales, entities who bought Bitcoin when it was under $10. Because of this, the price has made a couple of important manipulations. First, this manipulation here, where targets on the 4-hour chart were taken out, and second, this manipulation here, where they took out all the stop losses from those who had positioned themselves in long trades at this point of the price. From here, we could see a recovery directed towards targets on the 4-hour chart. The first upside target we can establish is in the 117,208 zone. However, as we can see, the price is finding it very difficult to recover. A second important zone to watch for the week is here at 119,677 and after that 120,870. This another key level we could be watching. If the bearish pressure continues, I would like to highlight the fair value gap. We have this point of the price located at $110,193. This could be another target for the price. If there isn't enough bullish strength, the price could come down to this point, create a manipulation, and perform a liquidity graph before potentially moving higher. The outlook for Bitcoin is very complicated right now due to a scenario of uncertainty. Therefore, it is crucial to manage your risk properly and avoid over-leveraged positions. That's all for this week's analysis. I hope this information helps you in your trading journey. Don't forget to register with Xchief to start your trading journey with the best tools and support. Also, if you found this video helpful, please give it a like and subscribe to our channel for more weekly market analysis. See you next time.